The Share Pickers Podcast with Justin Waite. Building wealth through investing. For more information, visit sharepickers.com. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Share Pickers Podcast, episode 6. I'm Justin Waite, and this episode is entitled Patience. And I'll give you 2 quotes here. The first one is by Paul Getty. It is possible to make money, and a great deal of money, in the stock market, but it can't be done overnight or by haphazard buying and selling. The big profits go to the intelligent, careful and patient investor, not to the reckless and overeager speculator. That's it, Paul Getty there. And the stock market is designed to transfer money from the impatient to the patient. In fact, the actual quote is from the active to the patient. That's Warren Buffett. This is very true. I've suffered from this in the past. I've done lots of research on companies and been convinced on them. Very confident, high conviction. And then I've waited and waited for a couple of months and jumped out. And the share price in these companies gone berserk. Literally multiples. And so one of my big problems is sitting there and doing nothing, because it's very hard for humans to do that. We are hardwired to do something. We have a billion neurons sending messages across our brain. Do something. Buy, sell, buy, sell, buy, sell. But it's not the way to make money in the stock market. There's a difference between a trader and an investor. A trader trades the share price. They skim, little percentage profits here and there if they can. But generally, they lose money. Check out any spread betting company. On their website, they will say 70+% of people lose money when spread betting. Don't challenge that stat. You can't predict the short-term movements of the market. The old saying, time in the market beats trying to time the market all the time. Why? Because you have big down days, and people that are under-researched or not confident or trade will jump out in the scary days. Then, when do the best days in the market happen? Generally, after the big down days. So unless you have ESP or some kind of, special ability to predict the future, you will not be able to jump out before a big day, jump back in before a big up day. Doesn't happen. You can't predict the market movements in the short term. Can't be done. Okay? The best investors worth billions will tell you this. You may have to learn it by losing money. All you can do is this. You've got a better chance, a higher probability of studying a good business and knowing that it will do well over the mid to long term. And I'm talking years. That's all you can do. So you can see a company, see that it's growing. I look at, I'm into microcap stocks. See that it's growing, buy it at a reasonable price, and then see it generate sustainable value. Sustainable is very important. I'm not talking about investing in a company because it's got a news event coming up, that could move the share price up. I'm talking about a prolonged period of improvement and sustainable growth. And I'll give you an example of this. I've got one of my biggest high 5 conviction stocks is Escape Hunt. And I also own Polarian, Biome Technologies, Gfinity and Trufin. 5 companies there. They are my high 5 conviction stocks. I believe in them because I've researched them. I believe they're going to be worth multiples. I'm not looking for 10, 20, 30% growth here, as a trader would try and do, and then fail. I'm looking for multiple return. And in fact, I've had multiple returns on quite a few of those companies. But I'm still holding. Why? Because I don't believe they're anywhere near where they could be, potentially. Now, why jump around in and out of different companies for 10, 20% when I think the companies I'm in right now are going to return multiples of where I'm at and that I've already achieved multiples? And I give an example of why. So, for example, Escape Hunt. Obviously, COVID hit hospitality companies last year, and so any revenue that they've reported this year isn't going to be spectacular. But the short-term investor only sees that, or trader, I should say, only sees that. Oh, share price is going down, jump out. Oh! It's not about the share price, okay? A trader will look at the share price. An investor will look at the business. Now, you have to disconnect the share price from the business. It's very hard because the share price affects you psychologically. But you invest in the business. So, emotionally, invest in the business, okay? Study the business, not the share price. Don't look at charts. They're okay now and again, to look at trends and stuff, but don't look at charts when investing. Look at the business. So if I'm looking at Escape Hunt, for example, it's got up to 50 pence, it's come back down to 30 pence because there's been lack of news, there's been a reopening of the economy, and of course, trade so far has been limited because they haven't been open since towards the end of May. But the update they did recently, since the end of May, already on their established like-for-like sites, they are busier. Now, because the share price has gone down from 50 to 30, some people have sold just because of that. Well, the share price has gone down. So why are you selling then? Because it's gone down. That's why you're selling. That's insane. The business is getting better. The share price is going to go higher than where it was previously. You can't just predict the business on the share price. It's got nothing to do with it. You can have a general market sell-off, the share price going down, the business can be improving. And in fact, it is. Now, I completely believe there are a market capitalization right sort of 27 million. I believe there'll be over 100 million market cap in 2-3 years' time. Why would I sell now? And what's the evidence I have for this? Because they have a plan to get 50 sites which will generate the kind of value that will support that multiple. Okay? So why am I getting down now? This is the silly people who sell on down days or big down days are the people who lose money. You can't predict short-term volatility of the stock market, so you just have to be patient, do your own research, and have conviction. Now, there's a special type of business I'm talking about. I mean, long-term, sustainable, improving businesses, not just companies that will jump on a one news event, okay? But it's hard, and the lesson here is have patience because it will pay dividends. It will pay massively over time, okay? All you have to do, and this is your challenge, my challenge to you. I'm getting better at doing it, but essentially, I'm trying to disconnect between the company, okay, and the share price. The business and the share price. The business is important. The share price is less so over the short to medium term. But, of course, it will reflect the business in the mid to long term. So, try and do that. Disconnect between the business and the share price. Focus on the business, not the share price. Hope that helped.
The Share Pickers Podcast with Justin Waite. Building wealth through investing. For more information, visit sharepickers.com. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.